Good morning, everyone. Welcome to the Macro Snapshot. We are Friday, August the 8th, 2025. Not a lot going on. There's no economic data, particularly today. So let's just have a look and see something which got the market's attention over the last 24 hours. Basically, if we look here, we've got the gold contract. Now, this is the gold contract which is traded in New York on COMEX. And keep in mind what happened a couple of weeks ago with copper on the COMEX in New York, basically because of tariffs by Trump on copper. There was a premium, and then Trump reversed that, and so the price of copper collapsed compared to the rest of the world. So we're getting a similar kind of situation today, not as dramatic, but basically, the Financial Times newspaper sort of essentially released a letter purportedly by the sort of the customs in the US, essentially saying that gold imports, gold bullion, so gold bars, basically 1 kilogram bars and 100-ounce bars would be subject to tariffs. And the market wasn't expecting this. They assumed that that would be exempt. And so what we see here is that those bars, which are traded on the New York sort of a COMEX exchange, you can see that they basically had a spike upwards here and have subsequently come down. But basically, there was a bit of a short squeeze. So keep in mind that a lot of sort of physical bullion traders are using the futures as hedging instruments. So anyone who is hedged short, basically they were sort of pushed out of their position in a bit of a short squeeze here. And this is interesting just in the context also of what's happening in Switzerland. Well, we'll get to that in a second. But have a look at this. So this is what's going on with the futures contract. But if you actually look at the spot contract, or the spot price, you can see that there wasn't any equivalent kind of spike here. So basically what's happening is that there's a bit of a premium being built into the COMEX gold futures price over the global spot price, specifically the London spot price. And we can see that. Just got an article here from Bloomberg, essentially showing here this is the spread, as I say, between the COMEX contract and London spot. And you can just see in the last couple of days that's gone up from about 50 or 60 dollars up to $120. So a big sort of spike upwards there. And that's interesting because the market probably wants to know what's going on, because this is going to create a huge issue of, sorry, my computer is sticking. This is going to create a big issue with the gold market, specifically the futures market. Hold on, share. Guys, just have to apologize. My computer is very lagging this morning, something wrong with the connection. So it's difficult to see charts and to speak. But what is also interesting is that in London, rather than the 100-ounce bar or the 1 kilo bar, they use the 400-ounce bar. And so what some people are saying is, does this mean that all of these 400-ounce bars can be sort of imported into the US, but they just need to be melted down and basically converted into the 100-ounce bar, which is acceptable on the COMEX. But the problem there is that there's a sort of refining capacity limit in the US. It's the US doesn't have unlimited refining capacity for gold, and therefore my point is that in the future, next few days, until this is clarified by the US Customs Department, is it just a mistake or is this something deliberate? It could be, a lot of sort of dislocation in the gold futures market here as people are scrambling for supplies and not exactly understanding what is a fair price. And this is all in the context here of what's going on in Switzerland, because we know that Trump put a 39% tariff on Switzerland, which is causing a lot of heartache and pain in Switzerland. If we just have a look at this, look at the Swiss franc here against the US dollar, you can see here that the US dollar well, hasn't done a lot, but it's more the let's say have a look at the franc versus the euro. You can see the euro here is really ripping hard against the franc. And basically, this is in the context that a lot of the so-called trade deficit between Switzerland and the US is actually a gold bullion. So we know that Switzerland is one of the world's biggest centers for the refining of gold, and therefore they refine that sort of raw gold, so to speak, into bars, which is then shipped into the US for usage. Now, and the point is that that is, technically, registered in the trade balance or trade imbalance. And Trump is basically saying, aha, you see, there's a deficit between Switzerland and the US. And we're not even talking here about cheese or chocolate or pharmaceuticals or watches. We're talking about gold is the main problem. I don't want to say anything, but Trump seems to have overlooked that, or the Trump administration seems to not be really understanding that. And they've subjected gold now also to this sort of curious tariff. And who knows, is this another way of kind of putting the knife in the back of Switzerland? We shall see. Anyway, all that to say that in the short term, the Swiss franc is going to be under a little bit of pressure, especially against its European cousin, the euro. You see here, as I was saying, the euro coming up against a bit of resistance here, the 200-day moving average and some overhead sort of horizontal resistance. But basically, Switzerland, it's really a lot of concern at the moment because, the president of Switzerland went across to the US the other day. She didn't get any satisfaction there. She came back to an emergency meeting in Switzerland with the Confederation of Industry and whatnot. They're talking, some people are saying that they have to shut down production. That, for example, I was looking at the watch company Breitling, and they only have, I think it's 2 or 3 months inventory in the US, and they're saying that in the future it may not be economically viable for them to be sort of trading or sort of selling in the US. And so therefore, for a lot of these smaller specialist Swiss manufacturing high precision companies or Swiss sort of watchmakers or luxury chocolatier, something like that, it's going to be difficult because with a 40% tariff or a 39% tariff, it becomes, basically impossible to sell their products. So we'll have to see what Trump's end game is here. Maybe he's looking for some sort of concessions on pharmaceuticals because pharmaceuticals are not yet part of that. And probably the end game for Trump is to try and get a reduction on the costs of sort of Swiss pharmaceuticals imported in the US. In the meantime, the Swiss manufacturing base is under pressure and is trying to sort of figure out what the future holds. And now with this new tariff on sort of gold bars, as I say, that's causing a lot of dislocation in the New York price as well. So let's just keep an eye on all of that and also the Swiss franc, something interesting to look at. Other thing today, I just want to look at Canada for a little bit. We haven't spoken about that for a few days. If you look at Canada here, the Canadian dollar, has strengthened a lot against the US since sort of Liberation Day. You see liberation or the announcement of tariffs on Canada. And then ever since then, it kind of spiked. But ever since then, the US dollar has basically come back down. And you can see the last few days it's coming back down to sort of its more normal, so to speak, or historical trading range between about 132 and about 140. So that's where we're at the moment. And it's interesting just to look because today we have Canadian data, we have the employment data. And let's just have a look and see what's expected there. So I've got, I think it's here. Yeah. So you can see that the net change is expected to be plus 10,000. The prior was 83,000. So a very, very strong number here, which was a bit of an outlier. And who knows if that data was manipulated as well. But we had the unemployment rate forecast to go up to 7%, so ticking a little bit higher, which the Bank of Canada will not like. But what's actually most important is to really look at the breakdown between full-time and part-time, because you can see that last time, although the jobs number was very strong, adding 83,000 jobs, actually when you look at it, it was about 70,000 of those jobs are actually part-time jobs. So that's showing an economy which is not nearly that strong. And if you look at a lot of other metrics for the Canadian economy, it does seem to be slowing down. And therefore, the question really here is, just in terms of today and the employment data in Canada, if we look here for the next meeting, which is on the middle of September, we can see that there's about a third chance of a cut, so 33% of a cut priced in, which is only about 8 basis points. So at this point, the market is not expecting a cut. The data today, if the unemployment comes in, if the employment numbers come in weaker than expected, that could cause the Bank of Canada, this interest rate sort of probabilities to be repriced a little bit. And if we actually just look at that, it's kind of curious here. If you look at the at this blue line here, this is the Fed, so I'll highlight it. So this is the Fed, this is the overnight rate, and you can see here that the Fed obviously got up to around about 5% or so, and then has cut, as we know, not too much. I'll just highlight it again. You see the Fed has cut, and we're now down at about 4.37. You can see on the left here the actual the overnight rate. So 4.37 is kind of the mid rate where the Fed is. So the Fed, hiked quite aggressively in the blue, as I say, and has only cut, a few times here down to, as I say, about 4.3. But if we look at Canada, now Canada is this sort of purple line, which I've highlighted here, the sort of the light, not really purple, sort of a dusty lilac line. You can see that Canada almost got up to where the Fed is. So a pretty aggressive hiking cycle. But what you'll notice here is that the Bank of Canada had a Oh, hold on. There he is here. The Bank of Canada, which I've highlighted here, you see has had a much more aggressive cutting cycle down to 2.75. So you can compare here in the blue what the Fed did, just cut a few times, and you compare here sort of in this sort of purple here, you can see the Bank of Canada has been much more aggressive. So the question is, do they need to cut more? They're still a bit worried about inflation, but there are signs that the Canadian economy is weakening. And as I say, the market at this point is pricing in just a 33% chance of a cut coming up in September. But the employment data today will give us a little bit more of a read into that. So that's something to look out for also for CAD. In terms of other stuff, just while I've got the Bloomberg up here, there's no economic data today. You can see in the US, we really have to wait until next week. I think it's next Wednesday. We had the big one, which is the CPI, and then to a certain extent the PPI. But really, the CPI is going to be super, super important in terms of confirming whether inflation is sort of an issue, sticky, coming down, maybe actually going up a little bit. That's going to be kind of interesting. The other thing as well, which got the market's attention, is that Adriana Kugler, who was on the Fed board and abruptly resigned, her position is vacant until January, so to speak. That's the sort of technical sort of endpoint. And Trump came out yesterday and essentially said that he was going to nominate Stephen Mirren, who's on a Council of Economic Advisors and the sort of author of the notorious Mar-a-Lago Accord, as they call it. But what's interesting is that he's been sort of nominated, not necessarily as the Fed chair. So the idea here is that what Trump wants is someone who can come in very quickly and be sort of confirmed, and that'll be Stephen Mirren. He can actually vote on the next meeting, which is going to be September. So we could have a situation where we have three dissenters or three people at a minimum voting for a rate cut. So we obviously had Waller, we had Michelle Bowman, and now we could have Stephen Mirren in the next meeting. So there's be three dissenters potentially voting for a cut if the Fed itself doesn't actually vote for a cut. So how does the market interpret this? And the idea here is that Mirren may just be a temporary member of the FOMC sort of board of governors, and that maybe actually the real person who will take over from Powell is going to be Christopher Waller. There were reports yesterday saying that at this point the front runner is Christopher Waller. Now, how did the market react? I mean, in theory, if Trump is going to appoint someone who is, what one commentator called a bootlicker, I mean, essentially, we'd have to say that Stephen Mirren is, he's an intelligent guy. He's a very sophisticated economist. As I say, he wrote that sort of quite famous sort of academic report or sort of paper back, I think it was last November, which some people are calling the Mar-a-Lago Accord, which is simply which is kind of the intellectual underpinning for Trump's reordering of the global sort of trade balance. Anyway, so the point is he's a serious guy, but he is very much a sort of a pro-Trumpist. Whether he remains independent on the Fed, the jury's out on that. But for sure, if he's going to be put in there, we could assume that he's going to argue for sort of cuts in the Fed funds futures rate. And so how did the market react? The market immediately sort of reacted by saying, hey, this is someone who's definitely going to be sort of dovish at a minimum and maybe not that independent. So the stocks, they didn't have a huge reaction, but as you can see this morning, stocks are definitely not down. They're actually sort of crawling upwards as the VIX is remaining down. What is interesting is that on the news of Stephen Mirren probably going to the Fed, there was a short-term boost at the front of the curve, but as you can see here, not a huge move. And actually, as we speak this morning, down just a little bit. Again, not like a big move, but the front of the curve not ripping much higher. In terms of other stuff, the US dollar, if we look at the reaction to the US dollar, in theory, a sort of a dovish extra member on the FOMC should be sort of negative for the US dollar. But as you can see, again, there was a small pop yesterday when the news came out in the afternoon, but the US dollar actually a little bit higher this morning, not in any particular moves. As I say, there's no economic data particularly, right in the middle of summer here. What is interesting, though, is that gold did, on the news of Stephen Mirren, gold did get a pop. But again, we have to put this in the context. This is yesterday, so the 7th of August. So gold actually had the biggest move up on the Stephen Mirren. I was just watching the futures charts. on the Stephen Mirren sort of news. But having said that, we also know that that was sort of a little bit the similar kind of timing with the news about, the potential for sort of tariffs on gold, on bars of gold bullion. So therefore, maybe that was a mixed reaction, not only of Mirren, but also the this sort of arbitrage between the COMEX price and the sort of spot price. We shall see. But anyway, that's something to watch now because we have a situation going into the next Fed meeting where there's definitely, one person, Waller, who absolutely wants to replace Powell. We have Bowman, who already has dissented. And now, technically, there's one of Trump's right-hand men, Stephen Mirren, who will be on the board of governors. So it's going to be interesting to be around the table. And I think the days of just sort of, sort of collegiate consensus are probably coming to an end on the Fed. So that's going to be interesting to watch the machinations of that over the next few weeks. Talking about the Fed, we have Musselman today giving a speech, but apparently it's not really on monetary policy, so not expecting too many comments there. Apart from that, guys, just want to have a quick look at oil. Just to keep an eye on that because we have the upcoming apparently meeting between Trump and Putin. You can see here oil stabilizing. As I say, it's at a pretty critical level here, around about $64. It may want to stabilize there. If it breaks, for sure, there's going to be stops, so it could break a little bit higher. But again, I don't have any really sort of strong news on that. I mean, I was reading quite a lot of commentary yesterday and research. There are some reasons to be sort of bullish oil medium term, but in the short term, a lot of those reasons have to actually be bearish in terms of, lower prices might sort of get rid of sort of producers in the US. A lot of things. Maybe we'll talk about that next week. So I think oil at this point, probably waiting for the Trump-Putin sort of summit or meeting. In the meantime, just sort of hovering around this sort of level here. And it's not a place really for much money flow. Okay, I'm going to leave it there because, as I say, not a huge amount going on. We're right in the middle of summer here and no headlines or data. Let's see if there's any more news about gold. Definitely watch the gold price and look at the arbitrage or the differential between the spot price and the COMEX price. Thanks, guys. Have a great weekend, and we'll continue this next week. Thank you.